Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Economic Weather Report. We've just got some numbers in showing that retail sales fell sharply in March. Essentially, consumer spending growth has ground to a halt. We've got higher petrol prices, higher food prices, a slowing labour market, a slumping housing market, and a drought, and they're all affecting consumer spending. But the only thing we haven't had is a plague of locusts. There's no better way to see how much of a fall there was in March than to have a look at the chart. And you can see here that it's bubbling along well over 4% growth, and then suddenly it's dived. So we're down to 1% growth for core sales. That excludes motor vehicles over a year ago. It shows also the worst result in core sales in more than 5 years. And Statistics New Zealand says that more sectors showed falls in sales than gains, and that was the first time they'd seen that in more than a decade. Now, it's worth knowing, of course, that prices have been rising. So if you increase your prices, that can sometimes mess up the numbers that you've got on how much is being sold. So it's sometimes useful to have a look at the volumes of sales. That excludes the effect of the prices. And that showed a big fall in the March quarter. So not only are we spending less than total, but we're actually buying less in terms of products and services. That fell 1.2% in the March quarter volumes. That's the fastest fall in 11 years. Let's have a look at some of those areas where we're spending less. Takeaway volumes, they fell 5%, so we're not going down to the fish and chip shop anymore. Furniture volumes, they fell 6.5%. That's because, no doubt, this housing market is slowing down and we're buying less new furniture. Car sales fell 6%, and that's had an overall effect. But interestingly, petrol volumes didn't fall. So even though petrol prices are about 25% higher than they were a year ago, we're actually not buying that much less petrol. So what does this all mean? Well, the pressure is now really on the Reserve Bank to cut the official cash rate early. Most are still saying September, but there's a few saying June now, and no doubt with these figures we'll see a few more saying let's cut interest rates earlier. My bet though is still the Reserve Bank will wait until December. Although I must say I'm starting to wobble on that prediction. Consumer spending is obviously in trouble. And maybe it needed to be. There was too much debt built up over the last 5 years, and at some stage we had to have a hangover. This is what the hangover feels like. Quieter shopping malls and a 1.2% fall in sales. I'm Bernard Hickey. That was the Economic Weather Report on interest.co.nz.